Good evening. This side Rahul Magan here is a Group Chief Executive Officer, Treasury Consulting, and also a venture capitalist. As we speak, Treasury Consulting is a multinational headquartered group. But before I cover about Treasury Consulting today, I'm extremely pleased to share that our OTT platform, which is over the top, which is a private platform where we upload the knowledgeable videos. Knowledgeable videos covering derivatives, foreign exchange, regulatory, ISTA, FX, and many more, including private placement and many more financial topics. Our OTT platform, TRFX Academy, crossed 100 private videos. Today, as we speak, we uploaded 5 more videos on our TRFX Academy. And probably by December 2022, which means around 11 months from now, we are planning to have near about 500 private videos of 5 minutes each. So each video is somewhere between 4 to 5 minutes. We are trying to increase the tenor of the videos by 7 to 8 minutes. Let's see. So as we speak, our OTT platform over the top crossed near about 100 videos, and on a daily basis we are uploading 1 2 videos. Of course, we are relatively very small as compared to Amazon, Netflix, Disney Hotstar, and many more big platforms. We appreciate that. But yes, we are trying very hard to make sure that probably in another couple of years, which is by 2023 end, we would be in a situation to have a dedicated private platform where we upload the knowledgeable videos. So just like you are having Amazon, you take their user ID, you pay to them, you see movies, dramas, biopics, now sports also, and so many things. Just like you have Netflix, similarly we are having our OTT platform. Regarding treasury consulting, then treasury consulting is a profitable company as we speak. Unlike Ola, Uber, Swiggy, Zomato, Byju's, Paytm, and all these companies, we are profitable since inception. Company is having high profitability. At the same point of time, treasury consulting is nothing but a hedge fund. By hedge fund, we means we are proprietary in nature. Now, proprietary means whatever positions which we are taking in our hedge fund, which includes FICC. Now, by FICC, I mean fixed income, currencies, and commodities. These positions are backed up by our own capital. Now, these positions are not backed up by any third party capital, which means no one invested in our company. So, whether these positions are $100, $200, $300, $400, they are backed up by our own capital. Having said that, our hedge fund is completely profitable in nature. More importantly, we have other revenue streams, just like we have trainings, our private news desk, our private placement programs, our consultancy desk, our family office desk, our pension fund desk, and many more products. And more products are coming. As an organization, our focus is to have a dedicated OTT platform over the top in another 2 years. More importantly, to expand the reach of our news desk and many more products. In case you wish to have any information, you can definitely WhatsApp on my personal number, which is +91 9899 242 978. Alternatively, you can WhatsApp at our back office, which is +91 9818485155. To conclude, Treasury Consulting believes in knowledge, and we would continue to believe in knowledge because our endeavor is very clear that it is the knowledge that really matters. For us, the fake status like unicorns, which many Indian startups claim, and the investor know the reality, by the way, hardly matters. So, not a single private equity and venture capitalist is on the board as we speak. See you in the part 1 of the video, wherein we would be taking the fixed income component of the CFA Institute further. Have a great time. Thank you. Welcome to part 1 of the video. Like I said, the world is chasing degrees, certifications, vocational courses, and all these things. But the real knowledge is lying somewhere else. Lord Shiva also said that if you look outside, you will always be distracted. And if you look inside, you get the answers of most of your questions. The similar words repeated by Lord Narayana also in Gita to Arjun, where he said that, my friend, don't look outside, because if you look outside, you have thousands and thousands of faces to answer. You have thousands and thousands of questions to answer. But if you wanted to have the real answer, then look inside. And what are we doing? The same mistake which Lord Shiva and Lord Narayana warned us not to commit. We are too busy looking outside rather than having inside. Like I said in my first video on CFA Institute, that we procured the material from Amazon. This is the level 1 material. Level 2 material is already received by us from Amazon, and level 3 material probably we would be buying in another 15-20 days. It depends on our schedule. So this is level 1 material, in which you can see that fixed income derivatives, alternate investments, and portfolio management. This is the CFA book, which is provided by the Amazon, and millions of people across the globe, not only in India, rather worldwide, paying thousands of dollars to procure this material, study it, get a CFA degree, to whom I always mention as certified financial analyst. I repeat, certified financial analyst. Now this is second in this video, and you can clearly see that I have made a notes also. Like you can see, I have made a notes also, and these I'm reading this one by one, not for the sake of knowledge, because these books hardly have any knowledge, hardly. As the time progresses, we would have more videos on the CFA courses, wherein we would let you know that how obsolete the course structure is. And sometimes I doubt, to be honest, that how would the committee, or maybe I would say a system, whose job to ensure that a course has to be regularly updated, how this committee and system work, on what basis they are actually being approved. Anyways, today I would like to cover another stupidity by CFA Institute, and this stupidity starts from page number 7, level 1 fixed income derivative material, which is volume 5, level 1, volume 5, page number 7. Slowly we would have more videos. We are in 2022. I have a research report by Janus Henderson, one of the leading hedge funds of the globe. And in this report, and by the way, this report is not 1980 report. This is very latest report, 31st December report. Very latest report. And very soon I am planning a video on that regards also. In this report, it was clearly mentioned that the sovereign debt, which means the debt raised by the governments under their name, including the Singaporean government, US government, Japanese government, Chinese government, Indian government, European governments, all governments, is near about $60 trillion. Near about $60 trillion. In 2020, because of Corona, the governments across the globe, rather the debt-ridden governments across the globe, raised a huge amount of money. And you would be surprised to know that 24%, 24% of the funding is done none other than by the central banks, which means if the governments raised $100, I'm not entering into detail, we'll have a separate video. If the governments raised $100, then out of $100, $24 are provided by the central banks, which means heavy quantitative easing, 24%. 76%, the balance, is provided by the public or institutional investor or maybe the local sovereign authorities. Okay. We are in 2022. We know the situation of Sri Lankan government. Sri Lankan government is more or less on the verge of default. We know the situation of South Africa. And it's not about Sri Lankan and South Africa governments. There are many governments, many we have, whom situation is more or less same. And practically speaking, many governments defaulted in 2020 also. Now, there are two forms of default we always have. One is the technical default and one is the cash default. I repeat, one is the technical default and one is the cash default. Now, this is part one, and let me summarize. As per Janet Henderson, and I have the research copy with me, the world sovereign debt is near about $60 trillion and expanding, by the way. How we would pay 60 trillion, only God knows. I don't know. Out of which 24% is by the central banks, which means extensive quantitative easing. And rest 76% is by the local authorities or public or institutional investors and all. We know the situation of Sri Lankan government as we speak. We know the situation of South African government and many other governments. Even as we speak, Singapore national debt, Singapore, who claims to be a global financial center on paper, actually it is not. Their national debt is near about twice of the GDP. In case of Japanese government, it is 250% of the GDP. Which means if the GDP is $1, assuming, the national debt is $2.5, 250%. Now this is part one. In the part two, we would be covering more in detail. Have a great time ahead. Welcome to part 2 of the video, whereby we would be covering about the CFA study material. Chartered Financial Analyst. It's a wrong definition. Certified Financial Analyst. Page number 7 on this video, on this course material, which is provided by the CFA, available on sale at Amazon. When you compute the value of a bond today, you are the most idiotic person in the world. I repeat, most idiotic person in the world if you're not taking the impact of credit risk. We are in 2022 January. The world saw Evergrande. There are many companies in India that defaulted. Many utilities in London, England defaulted. Many companies in United States, which are known as the corporate default, they did defaulted. So whether this is India, whether this is United States, whether this is London, or whether this is any other country, the defaults are there. You check this on the Google. It is on the Google. It is not something I'm telling you that, this is a very confidential news, that which is only available to me. Not at all. This news is on the Google. The only thing you need to learn about this news. So how could you print a material wherein you are calculating the present value of the bond without taking the impact of credit risk? Don't we aware about the defaults of United States? Don't we aware about what had happened in 2008? Don't we aware about the Lehman Brothers, the MIRR? Citibank share price reached at $1. What had happened to Goldman Sachs, JP Morgan, Morgan Stanley, and many top banks, American Insurance Group AIG in 2008? Don't we know that in 2008 what had happened in Singapore? How many companies defaulted in Asia or the Asia Pacific region? If we are saying that we printed this data in 2022 as per the material provided by Amazon, then we need to learn that I'm talking about 2008. And Evergrande is not 2008, it's 2021 story. So it's completely missed. So somebody who is taking a CFA course, he is learning this is how the present value is computing without knowing the impact of credit risk. And he believed he achieved the universe. The reality is he achieved nothing. This is how it works, let it be honest. Another stupidity is the fixed income instrument are of two types. Number one, they are front tested. Number two, they are back tested. Now, what the hell is that? Let's take a trading desk of big banks like Goldman Sachs, JP Morgan, Citi, Wells Fargo, UBS, Morgan Stanley, all these big boys. They take extensive positions in the bond, rather treasuries. Now, by treasuries, I mean they take a position in the US Treasury, 2 year, 3 year, 4 year, 5 year, 10 year, till 30 years. I'm not saying that they are not taking position in the corporate bonds. They do take position in the corporate bonds, but treasury market, they are highly dominated. And they go with the way markets are going. because even though they are market makers, but still, and sometimes they take the spreads also, which is 2s 5s, buying 2 selling 5, or counter selling 2 buying 5, 5s 10s, like this spreads which they are taking. And these all desks which I'm talking it about, like whether this is Goldman, JP, Citi, Morgan Stanley, they are front desk. Front desk means that today they have a treasury bond they bought at 110, assuming 10-year, and now they wanted to quit, and assuming the market rate is 115, assuming yields fallen, they quit, make some money, which is called profit. But did the price which is actually coming at the screen, whether this is Reuters or Bloomberg, this price is actually coming from the market sources? You may have enough stupidity by computing the present value of the bond, by computing the present value of the coupon, and so on and so forth. But this enough stupidity is more than enough when you're not taking the market screens. Goldman is not the only authority in the bond. So would JP Morgan, so would Morgan Stanley, so would UBS, so would Deutsche, so would Citi, so would Wells Fargo, so would ANZ, West Bank, National Australian Bank, and many more banks. They are dependent on the market price. So, how would you compute the present value of the bond thinking you only need that value? In this course, when it comes to bond pricing, it is back tested, which means that I have made my mind very clearly. And what the hell is that? I am going to be pricing the bond by hook or by crook that I want this value. I want this value, so whatever the discount rate is coming, this is correct. Go to hell the market forces, go to hell the credit risk, go to hell the Reuters, Bloomberg, and all. I have a bond. I am going to be discounting it with this rate. No Reuters, no Bloomberg, no credit risk, nothing. And they call this as fixed income. Congratulations. So tomorrow, if I'm asking anyone that, any CFA candidate to whom I interview, and I simply ask, in a fixed income market, now whether this is UST, United States Treasuries, or whether this is in India, or whether this is anywhere, what is back tested and front tested, I'm definitely sure he would be or she would be looking at me like, what he's talking, because this was not taught to me. This is certified financial analyst. Certified financial analyst. See you in part 3. Welcome to part 3 of the video. Now, in this part 3, we would be taking our part 1 and part 2 further. Now, when we, like in this book, there were many examples of a bond pricing which were there. Like you bought a bond at 100 rupees, the coupon rate is 8%, the reinvestment rate is whatever, 10% or whatever. We need to understand that there is a big mistake in this book as far as the bond pricing is concerned. Of course, I had raised a point of credit risk. I had raised the point of the market pricing using live Bloomberg or Reuters screen, which are completely missed here. completely missed here. So anyone who would be opting for this course, he would never be able to understand that the way bond is priced is actually completely different than we being represented in the CFA Institute, Certified Financial Analyst. Now, when we take the bond pricing, there is a concept called reinvestment. Now, what the hell is that? The concept is I have a bond of 100 rupees. Basically, I invested in a bond of 100 rupees, which is paying me a coupon of 10%, which means 10% of that, which means $10, the 10 rupees, whatever you say, I'm getting as a coupon every year, you know. But majority of the investors, now there are two forms of investor. One is the buy and hold investor. Now, the buy and hold investor is a person who invest and forget, who take a very long-term positions. They are hardly bothered about the money. Just like you have Apple, you have many cash-rich companies of the globe. Those who are investing in the bonds, invested, forget. They are cash-rich companies. To them, it hardly matters. One is the scalpers. Scalpers are those people, those who scout the opportunity, which is nothing but the short-term interest rate. So they feel that today I'm buying a bond at 115, the Fed meeting is there, my bond would go to 117, I will quit. Of course, there is a two-way risk. What would if the bond come to 110? You're gone, your SL, stop loss hits, you're gone. Buy and hold investors believe in reinvestment. So let's take a simplistic example. Suppose Apple invested $1 billion in a 10-year treasury bond of US government. I repeat, they invested $10 billion in a 10-year treasury bond of US government. And suppose the US government paying a coupon of 1%, assume. Now in this 1% which US government is paying, they are getting whatever income as a coupon or a dividend income. Forget the taxes as we speak. Now this coupon income which they are getting, 1 billion into 1%, which they are getting, they reinvest this coupon income because Apple is a cash rich company. To them, this 100 million, this dividend which they are getting on 1 billion US dollars of investment, it hardly matters. It's a cash rich company. And as we speak, in 2022, they are very, very closer to 3 trillion valuation company. Of course, huge cash in the balance sheet, not to mention this. Now, what happens? They invest this 100 million probably in some mutual funds, probably in some bonds, or probably various avenues, or maybe structured product also. Now this component which they invest is subject to some interest rate fluctuation, which is called reinvestment risk. Probably at the time of the investment, they were getting 1% and now they are getting 1.5%, which means gain. What would if they get 0.80, which means loss? What would if they get 0.60, which means more loss? But Apple is hardly bothers because Apple is a cash rich company. To Apple, what matters is the reinvestment. But when the period matures, 10-year, Apple treasury function would be computing how much money they actually generated from the inception, which means that 10 years ago when they invested $1 billion at 1% coupon and eventually they got the coupon price and they reinvested that coupon, how much they actually got. Now, whatever they got after 10 years, this concept is known as MIRR, which is nothing but the modified internal rate of return. I repeat, modified internal rate of return. But MIRR is of two types. One is MIRR with no fluctuation in the tenor, and MIRR with a fluctuation in tenor. Now, which is called XMIRR. I repeat, MIRR is of two types. One is the normal MIRR, which means no fluctuation in the tenor, and one is XMIRR, which means fluctuation in the tenor. Now, that XMIRR concept is relevant because the coupon reinvestment timing is not sure, not always sure. Timing matters here and there. So, what would if Apple got the coupon and Apple is waiting for the Federal Reserve policy? They hike the interest rate and then we invest. We are a cash rich company. We can have coupon in our bank accounts. We can wait. It hardly matters. This generates a concept called XMIRR, which is practical, which is relevant, and which is more important in your computations than you are talking it about. Does this book by Certified Financial Analyst Institute talks about MIRR? Does that book talks about XMIRR? No, it do not. Rather, the bond pricing on the page number 7, page number 8, page number 9, and so on, this bond pricing is completely ignoring the concept of periodicity. This is what I can say. Treasury consulting is challenging, open challenging to the CFA Institute that if they think that their course material is really relevant, then my number is 9899242978. I repeat, if they feel that their course material is relevant, then my number is 9899242978. Like I promised that I'm looking at the CFA course one by one, and each and every day I'm covering a lot of concepts, but the stupidity is that this is far away from the reality. Now we need some time to cover the level 1, level 2, level 3. Probably in another couple of years we would be able to have a complete look. But yes, on a very frequent basis we would be sharing our opinions about the CFA Institute. This is Rahul Magan, and have a great time ahead. Welcome to part 4 and the last. At the end of the day, one thing which is very clear and concise, that is the degrees which we are taking. Now, whether this is CFA, Certified Financial Analyst, whether this is CPA, whether this is FRM, or any other degree, the level of theory is extremely greater than the level of practicality. If you are thinking that our videos covering CPA, FRM is not going to come, then you are mistaken, because like I said, we need some time. In another couple of years, which means by 2023 end, our videos covering CPA, FRM, and many degrees would be live on the YouTube. Now, this is our second video pertaining to the CFA course curriculum. And like I said, CFA is nothing but a theoretical degree. And it has nothing, as we speak, in the context of 2022, when the world is on robo-advisory, when world is talking about artificial intelligence, machine learning, RPA, cryptocurrencies, robotics, and all, CFA is still living in 1980 era. I have just started reviewing the course. I read I have just started reviewing the course, and in just 7 pages, and that too one curriculum, level 5, I got several mistakes. Just imagine what would be when I would be concluding the level 1. By the way, I am very pleased to share that the level 2 material is already shipped by Amazon to our place. So now we have the level 2 material. Probably we will wait for another few months and then we will buy the level 3 material. Let me go through the level 2, but I'm sure that the clarity issue, the knowledge component issue, which I saw in the level 1 course curriculum of CFA, Certified Financial Analyst, would continue in the level 2. This is Rahul Magan from Treasury Consulting Group. If CFA Institute believe that they are correct, they made no mistake, then my number is 9899242978. 9899242978. Have a great time ahead. Thank you. This is the video which is dedicated to the Treasury Consulting Group. And to be very honest, we are keeping this video now onwards at the end of every YouTube video. And all the courses by Sheetal Academy and Treasury Consulting Group. There are many questions people generally raised about treasury consulting, the products, the services, and we reply these questions on WhatsApp, LinkedIn, Twitter, YouTube, and variety of forums. But the quantity of questions, the queries are continuously increasing. Henceforth, we decided to make a video. Of course, this is not the only video which we are making. Rather, over the period of the time, we would continue to upgrade this video, to be precise. First of all, Treasury Consulting Group is a multinational headquartered group. We are based out India, Singapore, and Hong Kong. As we speak, company is around 5 years plus old, and more importantly, we are 100% cash rich company. Unlike the so-called unicorns, without quoting the name, and even if I quote the name, it's a fact that they never touch the profit. The company is in profits from inception. So since inception, the company is in profit. So we are a 100% cash rich group, 0% venture capitalist, and 0% debt. More importantly, our legal entities invest our free cash with mutual funds and international banks across the globe. We are a client to almost top 10 mutual funds in India, and that is the reason we do have holistic information about the mutual fund industry in India. That's a separate thing, that majority of the information never comes in public domain. Even if a fraction of the information comes in public domain, this fraction of information come for one day and then how it happens. So as we speak, we do have 3 legal entities: India, Singapore, and Hong Kong. More importantly, we are a cash rich group and we are having 0%, which means not a single cent invested by any venture capitalist or private equity firm. The company has not taken debt from any bank, financial institution, or hedge fund. So we are a zero debt company. That is something which we need to understand very holistically. The following are the products and services we do have about treasury consulting. The more detail is coming at the as the video progress. We have our own proprietary hedge fund. Many people in the world do not understand the meaning of proprietary. The proprietary means no party outside Treasury Consulting can invest in our hedge fund, which means that we trade with our own money. We are not accepting anybody's money. Even if you give us any amount of money, any proposal on the table, it is completely rejectable. So proprietary is a word which is often used in United States and Europe, but unfortunately this is least used in India. The proprietary means people trade their own money. They do not trade somebody's money. Even if tomorrow, after listening this video, you come to us and say that I give you $1 million to trade my money, I will say thank you very much. We are literally not interested. We hold our own proprietary fund, and that fund would continue to be proprietary, which means that the outside participation would continue to be zero forever. This fund includes the equities desk, the commodities desk. We have our virtual comics platform. More importantly, we have our OTT Academy. OTT stands at over the top, just like we are having Amazon Prime, we are having Netflix, Disney. There are so many, OTT platform we have worldwide. Our OTT platforms is not as big because they started 6 months ago, but thankfully we are having handful of customers and they are growing. In our OTT platform, we are creating video and uploading at the back end of our platform. People with authorized login ID and password can see these videos. Apart from that, no one else is authorized to see these videos. As the video progresses, you will get to know that as we are having around 13 plus, which is 13 plus different series as far as the OTT platform is concerned. As we speak, August 2021, it is 13 plus and we are continuously adding more series. Our idea is very clear. We will reach to 35 or probably 40 series in another 1.5 years of time. We are having our learning arm, which is Sheetal Academy. The details of the Sheetal Academy is given at the end of the video. We have our own family office desk. Rather, very soon, our hedge fund would be a part of our family office. We have our own pension fund desk in terms of consulting. And there are 62 plus different platforms which are listed on our fixed income platform, which is www.fixedincome.global. So as we speak, we have our proprietary hedge fund, we have our equities desk, we have our commodities desk, we have our virtual comics platform, our OTT Academy, our penny stock desk, Sheetal Academy, family office, pension fund, and variety of such platforms. TNFX Academy, which is our OTT platform, over the top platform. This platform is having 13 plus series. Now, few I mentioned, basic series, moderate series, advanced series, valuation series, treasury series, wealth management platform. Wealth management platform is actually integrated with TRFX Academy and would continue to be integrated because of course we would be investing heavily in the wealth management platform. When we speak about wealth management platform, we speak about the learnings. We are not talking about the trading. There is a difference. It's a training platform. Remember this. We have 13 plus different series, like few are basic series, moderate series, valuation series, advanced series, treasury series, research and analysis series, and we have variety of such series. So please do remember that. As we speak, we have around 180 plus videos live. Every week we shot 10 videos. So every month we are adding around 40 to 50 videos, and we keep adding more and more videos as the time would come. The target is very clear that we would be having more than 2000 plus videos probably in another 2 years of time, which means a dedicated private platform for learnings. So what is the wealth management platform? A wealth management platform is designed to cover all asset classes of the globe. The asset classes includes the fixed income, currencies,
commodities, credit derivatives, structured derivatives, and many more. So I repeat, a wealth management platform is designed to cover all asset classes of the globe. Wealth management platform is also designed to cover continent-wise topic. Continents are United States, Europe, AXI, Asia excluding India. We have excluded India because the financial markets in India are very, very shallow. Very shallow. Like if you speak MTN, medium term notes, if you speak about any exotic derivatives, nowhere people are taking this. In fact, you know that I worked as a corporate registrar. Even today, 99% of the treasury function in India are working as a cost center. Hardly 1% are working as a profit center. Hardly 1%, to be honest. So the continent wise include United States, Asia excluding India, Asia excluding Japan, India and Japan, global financial centers like Singapore, Dubai, Hong Kong, Luxembourg, Switzerland, and respective, and of course Latin America. We are creating a wealth management platform which would be covering everything. Example, CDS, credit derivatives. India is not a market of credit derivatives. Reserve Bank of India on paper allowing credit derivatives, but neither we have buyer nor we have sellers of credit derivative. So on paper you have credit derivative, but practically you don't have the credit derivative in place. Henceforth, we really need to understand that if we wanted to talk about credit derivative, the only markets are US, Europe, or Singapore. India was not a market, is not a market, and would continue to be, because we are doing nothing substantial to create a credit derivative market in India. That's the reason, even after a lot of frauds which are happening, banks are just writing off the money from their books. Simply writing off the money from their books. Had it been the credit derivative, banks would be able to get their money back. But once again, if you talk about this issue, people don't understand because they are not interested to have this. Anyways, a wealth management platform designed to cover all asset classes of the globe. And very soon, this wealth management platform would link with our fixed income platform, which is www.fixedincome.global. And of course, we would be adding crypto as well. That is most important. We are planning around 1000 plus wealth management videos by December 2022, which would be covering continents like United States, Europe, Japanese market, Asian markets, global financial centers, Latin America, the tax havens like Bermuda, BVI, Caribbean and respective, and structured finance, my favorite. 1000 plus videos would be covering almost everything as far as the wealth management is concerned. We would be covering a very simplistic and the plain vanilla topic. At the same time, we would be covering the exotic topic also. So basically, our wealth management platform is for the people, those who are having zero knowledge, and it is also for the people, those who are having advanced knowledge. Please understand that. It is not designed for the people, those who only have basic knowledge, or the people who wanted to have exotic knowledge. People with the basic, moderate, or advanced, they all can participate. This is our TRFX Academy, a screenshot taken from our fixed income platform. This TRFX Academy is our OTT platform, which is over the top platform. And in this TRFX Academy, we are of course interlinking the wealth management platform also. I promise you, probably in another 1 to 2 years of time, we would be adding a lot of content in our wealth management platform and of course our TRFX Academy. Only people with the login ID and the password can enter into this platform, and of course on a weekly basis we are trying to have at least around 10 plus videos, so that we would be able to reach to the target as far as the December 2022 is concerned. And we are committed to it, sir, to be honest. Treasury Consulting Group having own learnings platform, which is known as Sheetal Academy. As we speak, Sheetal Academy is covering around 13 plus schools. Few are mentioned here. The World of Options, Option Worlds, School of Nifty and Bank Nifty, School of Investment Banking, School of Venture Capitalist and Private Equity, School of Commodities, School of Accounting, School of Foreign Exchange, School of Treasury and Risk Management, School of Forensics, and more schools are coming. Before I change the slide, the purpose of Sheetal Academy is to create a learning platform which link with Thomson Reuters and Bloomberg. We know that we have many learning academies worldwide, and I challenge all learning academy how many of them are actually linked with Reuters and Bloomberg. I often share Reuters and Bloomberg screenshots on YouTube, on LinkedIn, on WhatsApp, on Facebook, on Twitter. Hardly I see, in fact, limited people in the world are sharing the Reuters and the Bloomberg platform screenshots, because the question is it requires a very deep and dense knowledge. Once you are sharing the screenshots, people generally ask questions from you, and you should have a knowledge to reply. That is more important thing. Very soon we have more schools coming. So as we speak, we are having Option World, Nifty, Bank Nifty, School of Investment Banking, School of Venture Capitalist and Private Equity, School of Commodities, School of Accounting, School of Foreign Exchange, School of Treasury and Risk Management, School of Forensics. The other schools are School of Trade Finance, School of Regulatory, School of Treasury Technologies, Functional Training. We have functional trainings, forensic trainings, information technology trainings, regulatory trainings, and technological trainings. As we speak, around 200 plus trainings are listed. More trainings are coming over the period of the time. All these trainings and everything are integrated with our fixed income platform. You visit our fixed income platform and you would be able to get all trainings and all information here. Apart from that, we provided you the WhatsApp number. You just WhatsApp if you have any query, and in most of the cases we reply if we feel that the query is genuine. So the Sheetal Academy is a platform whose job is to provide practical and industry oriented knowledge. Of course, we link with Thomson Reuters, Bloomberg TV, and many international magazines, international books, and so on and so forth to provide you as practical training. You visit our YouTube channel. In fact, the video you just listened, you can compare this video with any other YouTube channel and rest you know. Apart from that, we just launched our TCG Video World. What is that? We have people, those who working day night in their respective jobs. Some are engineers, some are finance people and all. They don't have time to attend the regular one-to-one trainings. I agree that they need video trainings, like the content shot in the video delivered to them, and as and when they get time, they listen to it. We launched our TCG Video World, Treasury Consulting Group Video World. In this video world, we have decided to have 100 plus topics, 5 already done as we speak. As we speak, 5 video trainings are live, pay and get. The only time need is the time to upload on Telegram groups. Every training at least 1 hour or 2 hours. It is a video training, so it is not a one-to-one training. Videos are recorded, you get the videos, recorded videos. Videos to be upload in the Telegram groups, because Telegram gives you the privilege to upload 2 GB of video. Whenever we feel that the video length is big, we request people to share their Gmail IDs. They can create their fresh Gmail ID and we upload the video in their Gmail ID. Which so that because Telegram as we speak is giving a privilege of only 10 GB, 2 GB. This TCG Video Worlds covering advanced trainings, moderate trainings, and basic trainings. So basic trainings, advanced trainings, moderate trainings. Please note my next word carefully. All basic trainings would be 2000, which means you choose any topic of basic, you get at 2000. Moderate and advanced training pricing depend upon content to content. So I repeat, TCG Video World is a platform when you have 100 plus topic, 5 already live, 2 hours video training. It's a video training to be uploaded in the Telegram group. If we need more space, we request for Gmail ID. Advanced trainings, moderate trainings, and basic trainings. Please do remember this. And this is live. This platform is well integrated with our fixed income platform, www.fixedincome.global. So this is well integrated with our fixed income platform. This is a glimpse of our hedge fund desk. Like I made myself very clear upfrontly that no third party in the whole world can enter in this platform, which means that we do not trade somebody's money. We only trade our own money. So no third party can enter in our platform. This is only for ours. But this platform covers equity desk. This platform covers scalping group. This platform covers commodities desk, comics platform, penny stock desk, silver scalping fund which we just started, and more importantly the Asian desk where we're covering Singapore and all, and the digital gold. More product we would be launching in this hedge fund, but I will again repeat, no third party except treasury consulting can enter in this fund. This is not for outsiders. This is our prop hedge fund, which is completely designed for the organization, by the organization. No third party is allowed. And we are very limited companies in the world, those who are running the profitable hedge fund. Our income and everything is really good, but we do not trade somebody's money. These are our credentials. You know my handheld number 9899242978. These are our WhatsApp numbers, our platform www.fixedincome.global, email ID rahul.magan@treasuryconsulting.in or info@treasuryconsulting.in. I assure you, probably in another 1 year of time, we would have more than 100 plus different platforms across the globe. Company would continue to be cash rich. We never allow any venture capitalist to enter in our company because we know the side effects of that, and we continue to add lots of products and services. In case you wish to have any information, these are all the credentials. Thank you guys and have a great time ahead.